Morning traders, Paul here with GammaEdge. Today is Tuesday, the 11th of July. Make sure you stop at 7-Eleven and get your free Slurpee. Let's get started. Pause your players here, read to the bottom. If you agree, hit that play button. This is important to you and it's important to us. Summary for today, we got green across the board. Maybe a few little storm clouds on the horizon, but the big picture as we look at what happened yesterday, we've generated what we call a continuation day up. This is appropriate for the 0 DT and the 1 to 3 day swing traders. Our short-term market model, which is the cumulative tick, closed above the previous day. It's a continuation day up. And this is most appropriate for the 0 DTE folks, and you should be butt in seat watching this if you intend to use this signal. The railroad track pattern, which is a moving average on the CT, it's a very short-term thing. It's appropriate for the 1 to 3 day swing traders. It too has a continuation day up, and both of these are now in day 2. And because they're trend following, they follow. They don't lead, but just keep aware of that. Now, there is momentum in this indicator, and that's indicated by the long-term market model. This is appropriate for the 2-week folks. Remains in an uptrend. We had a resumption of the continuation to the upside yesterday, and so far, all intents and purposes, until we see a pullback, we remain overall bullish, driving by the rearview mirror, as you can see there in quotes. This said, we're always aware of reversal downward and or continuation upward. You should always be aware that nothing is predictive and you need to have good risk management in place. So as long as we remain above key levels, dips can be bought. We think that if we do fall below these key levels, you'll want to get out and retry entry if we come back above those levels. So we were calling for the range right around 44.10 yesterday. We ended up right at 44.09. Pretty good about that. The SPX complex transition has dropped a little. It's now 44.15, and minus trans is 44.10. Very tight, very well defined here, so just be aware of that. It is short-term bullish because we see short-dated puts being closed and calls being opened. The combo complex, which is the AM and the PMs, plus trans, also did drop, 44.10 and 43.95. So it's gotten a little bit wider. Transition's a little bit less defined than it was yesterday. That said, same thing. Puts were closed, calls were open. So speculators are there, and they're getting ready to play the upside by our eye. We are within the top of transition, or within the box. You'll see what that means here in the next few slides. It's neutral to slightly bullish, so play accordingly. If we can get above that 44.10 area and hold it, 44.15, etc., and start pushing north, things will probably unfold in our favor. Now, when we take a look at all of the Greeks and we look at the dominant strikes, 43.70 is indicated as probably the downside lower range, and 44.50 as the upside upper range. We do have a mixture of call domination and put domination, whether they're in the money or out of the money, so just be aware of that. Out of the money things tend to go towards, as we get closer to expiry, to in the money, and that has an influence on the overall boundaries for price and dealer adjustments. 0 DT folks, we've got a lot of them in the Discord, as you guys know. Plus trans 44.05, minus trans 4400, so that's dropped a little bit. Again, puts were closed, calls were opened, and that's what causes transition to drop. This is short-term bullish in general. We are looking at plus GEX at 44.25. If we can get above that major gamma strike, we're probably gonna settle and start pushing north of 44.50s. By the other side, if we see minus GEX at 43.85, if we drop down to that and fall through that, that could open the door to test that 43.70 that we saw for both the deltas, Charm and Vanna. Key things to watch here today. We want you to pay attention to the value SPX 07. That'll give you 7 days out on the dailies, and Vol D, which is just the 0 DTE. Watch the distribution of those returns. They've been very insightful and can help you gauge where we are and what the market is targeting. Taking a look at the market model, as I said, we have a continuation day, very good back-tested performance. If you add to longs on these days, wait for your moment, don't chase it. But nevertheless, even though we started off with a little bit of weakness in the morning yesterday, as you can see, we did break as soon as the euro market closed, and we started breaking into the afternoon session with linear up pattern into the early afternoon session. It's very strong. If you were playing the long side, you're doing pretty well. Taking a look at the gamma levels, just across the board, we're seeing strengthening on the call side and weakening on the put side now. Because this is gamma, these are short dated. It's not put open interest and call open interest. That PCR is a terrible metric when you're trying to gauge what's happening in the near term. I can open a series of calls or puts in leaps of significant size, which will change PCR ratio and has absolutely nothing to do with what's going to happen in the next week or today. So don't look at PCR, look at GEX, look at GEX ratio. And by our eye, looking here at GEX, we've had a significant improvement across the board. We're seeing a lot of short-dated calls being added to the complex, which is generally they go in as an out-of-the-money call, and that is speculative to the upside. We've seen a lot of repair. Remember, above the yellow line here, we have in-the-money puts and out-of-the-money calls. We're seeing a lot of repair of the deltas. They're turning green again. The only ones that are not green, you can see, are 44.55. Everything else has repaired itself. This paints a path to be able to resume that path north and potentially look at the 4,500, which people have been targeting. To the downside, the 43.85, 43.80 zone is of interest to us. And then, of course, the JPM end of July short calls are about 11,000 sitting down there. They are sitting down there at 43.65, not liquid, but certainly they are exerting their influence. We do see that 43.80 is probably the low side range within the PM complex. 0 DTE. We've moved to a positive stance. Any monetization could put a little downward pressure on us today. We're relatively balanced. You can see a little bit more calls coming in, expiring today than we have puts. That's why it's green. Just, pay attention. We could bounce around here. We're just above transition. We would not be surprised at all of testing the 43.85. We would love to see the 44.25, mostly because we've still got long deltas in our portfolios. And if we get that 44.25 or above, that probably will lock us in, especially if it's in the afternoon session, to start pushing north towards the 44.35, 44.40 zone. So that would set us up into an overnight session, especially at the 44.35 area, of potentially being able to strike out that 44.50 tomorrow and potentially even higher. The 1 DTE, we've got this large call domination at 44.30, 44.35. You can also see for tomorrow that plus GEX for the 1 DTE is indicated at 44.35. Why this is significant to us is that if we can get above that or get positioned in that for tonight's or end of day today, that will give us a good position to move north. We do see, and you'll see this on the next slide, we do see we've still got a little bit of weakness overhead that for the week we're going to have to overcome with more call speculation. So we're not painting a clear path to the north. There still is some weakness above us that the call speculators are going to have to step up, and they're just going to have to continue to pound those in-the-money puts into the ground. To the downside, you can see the 43.35 and the 43.20s have a fairly significant amount that is coming off tomorrow. We're not envisioning we're going to go anywhere near that low, but these will provide positive charm flows, although smaller because they're further away. But you can see all the way on down, 43.80 is about the only dominant strike as of today's data for tomorrow on the path, and that 43.80 is coincident with other numbers that we're seeing here for the 0 DTE and the SPX PM. So that being said, 43.80 is pretty much a line in the sand, and then if we start losing that, you can see there's more dominance that starts growing at 43.65 and 43.60. We're not envisioning going down there today. We would not be surprised, though, at a 43.80 test that potentially could set the stage for perhaps a move lower. We're not anticipating it, though. But watch tests of that 43.80, watch tests of that 44.30, and a break above or below could be definitive for what the next few days will hold. Taking a look at the crystal ball for the week. So sequencing is important, right? These are both the existing structure. These will grow until they expire, and these are the ones that expire this week. We are at the fulcrum. If you look where I circled blue up there, literally almost zero. So we are balanced. The market is balanced. It can go either direction in this. There is no risk to the market from an exposure point of view. So what we're seeing here in the big picture is basically we're sitting status quo right now. If we had to call it 44.40, looks to be the upside, maybe 44.45 for the week, unless we see these red deltas above that get pounded into submission. We need that to occur to have any sense of moving north. And we see the 43.95, 43.90 area of red deltas also down there. Again, we would need to see those put speculators have some sense that they're not going to make money and they're not going ITM. And if they don't go ITM, they'll take them off the table most likely so they don't lose their premium. So we'd like to see those close out below us. We'd like to see more calls added above us to have any confidence that we could push north to 44.50 and ultimately up to 4,500. The combo complex has really repaired itself relative to where it was yesterday. We were seeing a lot of out-of-the-money calls vaporize, which was exposing the in-the-money puts to the north of us. The only one remaining right now is the 44.85. And if we see any targeting up there, or if we see any sense that there's a push north, that may embolden the speculators, the call speculators, to start pounding the path north, and in that carpet bombing, they may actually target 44.85 and pound it into submission. That would be very, very positive for an overall bullish structure to the north. Now, to the south, the only one that's appearing is the 43.65. That is the end of month July JPM strike. It is not liquid. It's not going anywhere, but it is present. And those negative deltas and that negative gamma there will just continue to grow as we get closer and closer to the end of the month. So with all of that stated, just be aware that we're right at the top of transition, 44.10. That is really the upper bound, 43.95 lower bound. So we would not be surprised at moving around within this range. This would be a normal low exposure area for today. It's a Tuesday. Tuesdays are typically more weak anyways. So bouncing around in this area would not surprise us, with some periodic tests below and periodic tests above. The key strikes that we were talking about earlier, the 44.20, 25, etc., are very important, and where we close at the end of the day today will set up probably the tone for the rest of the week. Last slide here, the landscape view. Really nothing to note on. Plus GEX up at 4,500, it did increase, which is showing that we have some more calls going in there. Price is relatively unchanged from where it was yesterday, so we've got time effects which have caused it to grow to a certain extent, and then we've got the addition of new calls to the upside. To the downside, minus GEX reduced. So this is the net puts at 4,200. There really is no fear in the market. So folks are not targeting the 4,200 zone, but it is the dominant strike to the downside right now. Really the key transitions where if you just had to hold your thumb up and kind of estimate where we were, 4,400 to the downside, things start turning more red, as you can see. That's more put dominated. And if we can get above 44.15, we get captured by that positive call gamma, and that is probably going to be very beneficial. So with that, I will bid you farewell. If you're interested in this and want to come and kick the tires, we have this and many, many more tools available to be able to slice this stuff. GammaEdge.us, upper right-hand corner is a pricing tab. Click on it, fill out the blanks, come on in for a 14-day free trial. On Twitter, go to GammaEdges, follow us. Always like to have followers. We post content there frequently. And then on YouTube, here, two things. Thumbs up if you like today's comment. That gives me confidence that I'm providing the content that you find valuable, and I will keep doing the same. And of course, always leave feedback. I read everything, and so does Taylor and Mike. And two, subscribe so that next time you are in YouTube, you'll get notified that we've posted something. So with that, bid you farewell, make it a great Tuesday, and hope to see everybody in the Discord. Thanks.